Hi, traders. Good morning. Welcome to this live webinar with Elite Currency. My name is Svorcik, and we're going to take a look at the financial markets, the charts, technical analysis on this 15th of February, 2024. You know, the usual suspects, euro dollar, pound dollar, dollar yen, Bitcoin, stock indices, some forex crosses as well, so like Euro New Zealand. So hang on tight. We're going to be taking a look at a lot of time frames and a lot of charts in this webinar. Now, just in case you don't know myself or Elite Currency, we've been around for 10 years as a website. Our main income is not from the website. It is from trading itself. And that is something that, well, I can say is not something that doesn't happen always or doesn't happen that regularly. So yes, we do earn the most income, the far majority. So I'm not talking about 51%, but 80 to 90%. I think last year was 91%, perhaps even, from trading itself, and that is a six-figure income as well. So not a small level of income there. So yes, we are traders foremost, and we do this as an extra to help traders out there, but this is not our main income. I always want to make that very clear, that we're not doing this as our main thing. All right, so quick overview of last month's results. So those that missed it, here are the results from January 2024. As you can see, we added two new EAs that we've been trading for for some months now, and they've been doing good, 36 and 12%. The best is Flagship with more than 100%. Last month, 3%. And of course, we'll have a new update in March to see how the performance has been in February. But it doesn't make sense to go through that right now. All right. Once again, if you want to join Flagship, write us at info@elitecurrency.com to know how. And now it's time to take a look at the financial markets. And here, of course, you can follow all of our systems on our MyFX book page, which tracks all stats of those systems. All right, let's take a look now at the financial charts here. I hope you see it properly. Let me double check. All right, I think you do. Let's start with the euro dollar. So we had a head and shoulders kind of pattern available there, with the left shoulder around February last year, right shoulder just recently, head right here, and price breaking through with some bearish candles on the weekly chart, now trying to break through the 21 EMA. So it looks like a bearish breakout on this time frame. On the daily chart, it's inching lower, but with quite a slow pace. And on a 4-hour chart, we see that we are making lower lows and lower highs, but quite choppy. So I wouldn't be surprised that we might get a retracement first, looking at that time frame, on these time frames at least, and then a continuation lower. All right, let's take a look at a different view of chart point of view, or different template of chart, I should say. At this, you can see that if you look at the daily chart, there is a lot of indecision if you look at the long-term moving averages. Those moving averages are flat, but they are aligned for a bearish move. So we need a little bit more punch to the downside, and the 21 EMA will go below those long-term moving averages, and the 144 will cross lower too. So I think that it is a structure for downside, but it's vulnerable to a retracement back into those long-term moving averages at 108.50 in my view. And I wouldn't be surprised that around that spot there could be a bearish bounce, and the next breakout to the downside could be interesting for a move lower to, for instance, test this previous bottom. We could put a fib from here to here, and it could go to those targets there at 105.70, and then 105, and then 104.25. If we look at the weekly chart, we can see that there is a bearish alignment as well. So that would, I mean, this is a very long-term chart, of course, but we do have the head and shoulders there pattern. And we are trying to break below that 21 EMA. So if there is a pullback and continuation, there would be plenty of space to the downside on this time frame. And the 4-hour chart, let's see. Yeah, basically, if it does make a retracement into that area, you can see there are long-term moving averages that should react as resistance. The bearish bounce to that zone would make sense to me. There is divergence between the bottoms. You see this oscillator is higher than the next one. This one too. This one too. So a retracement up could make sense. So on the hourly chart, maybe there is space for a breakout above this long-term moving average zone. Price would need to hit it, make a retracement, bounce off the 21 EMA, and there could be a move up to the long-term moving average at 108, 108.50. Bearish bounce back down to retest the long-term moving average, bounce, and then break out lower. That's what I would expect. Basically up, down, up, down, up, down. Looking at this time frame. 15-minute chart. And this template is, by the way, my SWOT template that I use for manual trading, which is a smaller part of my trading, and most is automated. But occasionally I like to still trade a little bit manually. But the automated trading is my main kind of butter, if you want to say, my main aspect of trading. 15-minute chart is bearishly aligned. What price would need to kind of break through it, make a pullback into it, and then bounce off that for a 15-minute trade to the upside there. And even on a 1-minute chart, just for fun, you can see that all the moving averages were aligned bullishly here, and we had some scalp trades to the upside, specifically from here a few hours ago. Small move up there. Okay. Anyhow, that's just to see how that SWOT looks like on different time frames. But I think that that covers your dollar pretty much. Let's take a look at some other charts. Pound USD. Bounced off the 38.2 fib. So far, not making a higher high. Seems to be running out of steam here a little bit, and also making kind of a head and shoulders pattern. So some bearish move likely. And here you can see those moving averages are quite flat. So I wouldn't be surprised if price maybe makes a dip down, but then goes back to those long-term moving averages. When the moving averages are that flat, that is not it's quite typical for such price movements to happen. And you see that there is not much alignment to the downside here, except on the weekly chart. But seems pretty stuck in a wedge, and it could stay in that wedge. And I think that we won't see much movement there for the moment. Hang on, let me correct this trend line. All right. So for our chart, for me, it would require some time for price to make a dash down, make a correction, and then maybe a continuation lower. Would be interesting to trade down towards the previous support, which is around 121. So there is plenty of space here in that wedge. Don't get me wrong. And a push below the previous bottom. A push below, I don't see that here. Let's take a look. Let's zoom into the daily chart. Up with the previous bottom, I mean this one, this fractal here. A push below 125 could be an interesting bearish breakout here. But eventually there's going to be a bounce up. It could be a break, bounce, continuation, and then bounce. That would seem the most likely to me. So on a 4-hour chart, to me, this looks like a risky spot. But if it makes a dash down to 124.20, makes a pullback, and then continues lower, that looks like a pretty interesting setup there to me on this time frame. I just think it's a sip of coffee there. All right. 1-hour chart. Sorry. Already aligned to the downside. So in theory, a breakout here from WIS5 to WIS6, not bad. But we do have that 125 round level. If that 125 round level would not be there, that would look interesting. This looks a bit tight to me. 15-minute chart could have made sense up in here around 120, 126 for a breakout, maybe even up in here at 125.60. As I said, now it looks tight, maybe some 40 pips left until we hit that 125 number. Possible, but not my favorite spot. Maybe on a 1-minute chart, it could make sense. But yeah, we need some pullback here too, because that breakout has already happened. Anyhow, most interesting, I think, for the moment is really on a 4-hour, 1-hour chart is the break and pullback and continuation within that wedge to the downside, in my view. Because it does look like a bearish bounce is going to happen. I see failure to break above this. It looks like a bouncing spot, at least for a small move here to support. All right, dollar yen. Dollar yen does not look interesting to me at this moment because it's reaching a double top. So from a with the trend perspective, it's not interesting. For maybe for reversal traders, if it were to push a little bit higher to get a triple top there at 151, almost 152, that could make sense. Maybe to look for a daily bearish daily candlestick pattern, reversal candlestick pattern at that level could be interesting. All right, Bitcoin. I was wrong on that because I expected a bounce and then a continuation lower to go back down to 30,000 and the previous tops. Obviously, that didn't happen. It broke through that that level with strong candles and a lot of momentum. So it's heading up towards the next confluence of Fibonacci levels there at around 55 and 57,500. So a lot of momentum here. Is this a new uptrend? Who knows? Maybe, but I think personally that's still a strong resistance spot. But if it were to test the 21 EMA again, might be interesting to think about potential long setups there, just in case this is a strong uptrend. I'm still a little bit skeptical, though, to be honest, and expecting this kind of pullback still here. But that doesn't have to necessarily happen, of course. That's what I'm expecting, though. But it would be confirmed, as you can see here, we had 2 bearish candles, monthly candles. I think that's probably what we'll need to see before this scenario becomes a little bit more likely. For the moment, this is momentum up. And let's see how far that momentum pushes us, pushes this instrument up. But I'm still expecting, I still think that this is more likely, but I also acknowledge that I might be totally off on that. So for the moment, I think waiting for price to go back to the 21 EMA on the weekly or daily would make the most sense for a swing trade. But we'll see. Also, if it were to make that bearish retracement, as I said, 2 monthly candles are key in my view. All right. US30 last week had a doji. So there was some indecision, but also some it's quite weak indecision. I mean, there is some indecision, yes. It's not necessarily a very strong bearish reversal candle. I wouldn't call it that either. So there was some bearish reaction to the US inflation numbers that were better than expected, more positive, which the market probably interpreted as the sense that if the inflation is still, let's say, stubbornly higher, I guess that the interest rates will not go down as quick maybe as they were hoping for, which means that of course lower interest rates are good for the stock market. So that scenario might take longer to happen, which is not that great for the stock market. So that's why we had this nosedive here. But there was also a very strong confluence of fib levels there, as you see. So yeah, I guess price will have to, let's see if it makes a head and shoulders pattern and makes another leg lower towards this support zone. I think it is at a strong resistance, but stock market often surprises me how far it can push up. So difficult to say, but that would be my best kind of bet at this moment. All right, maybe more interestingly, this is the DAX, kind of the same scenario at this moment, is for instance Euro New Zealand. And I think Euro New Zealand could be making here preparing for a bearish breakout. We have all the moving averages aligned to the downside. We recently pulled back. We made a break below the long-term pullback, and this could be a continuation here with a breakout like this. Looks pretty sweet for a move down towards the 7 and the minus 61.8 target. Be careful of 175 round level 2. And it's making here on this time frame higher lower lows and lower highs on the daily. On the weekly, you can see that this is a retracement, but it is in a downtrend at this moment as well, although the structure is more bullish. So that could look good, like a bearish breakout to me. Push more below 176 could be an interesting breakout for that move lower towards 175, as I said, and then 174. And it's been quite choppy since here for on this 1 hour chart, but there could be a point where we get a little bit more momentum like this. Momentum followed by a pullback 21 EMA, and then a bounce and breakout and continuation, and maybe one more pullback to the 21 EMA, and then another lower low, and then maybe a pullback finally towards the 144 EMA. Gas keeps falling at 164 at this moment, and is 1/6 of the peak price of almost 2 years ago. Gold made a higher high, but is retracing at this moment. No trading ideas from my perspective at this moment on these instruments. Just discussing it, what's going on. But now let's take a look at the pound yen. Pretty strong uptrend here. Bounce at the 144 EMA zone here could be interesting. It is a strong uptrend. Of course, there is some divergence between these tops, so we got to be careful that the trend might be bending and might be looking at the final kind of push up, and we might get into reversal territory. So that's something to keep in mind. But if it does get to the 143 main and there is some bounce, might be interesting to take it with a small risk for myself. Depends a little bit on what's stronger, the pound dollar move down or the dollar moving down. All right. So far, I think the pound dollar downside looks more interesting, and the euro dollar up and then down, and the euro New Zealand down. Those seem to me like the more interesting ones at this moment. Euro yen. Yeah, you can see there was a great breakout trade here, for instance. The moving averages and the SWOT candles. Then we had an impulsive break, pullback, and continuation. Even this continuation here, good for about 60 pips. And now it looks like we had an ABC pattern, as you can see here. You see the waves are more clear with this, but doesn't have to be the end of the correction, of course, necessarily. Could be still a good spot for more upside as well here on the euro yen. Let me take a look at the euro pound. Moving off from support. So yeah, euro yen upside looks more interesting, whereas if there is downside on the dollar yen, then the pound yen would look more interesting probably than the for downside, and euro yen looks more interesting for upside. So we'll have to keep an eye on the dollar yen to see which of those might play out. All right. I think that's it for the moment. So for me, euro yen upside or euro New Zealand downside. So we can take a still look at maybe the New Zealand yen, actually, to get a little bit more feeling for that. New Zealand yen in an uptrend. So maybe New Zealand yen is the most interesting for upside. And euro New Zealand for downside. Plus maybe pound yen for downside. Let me take a look at pound New Zealand. Pound New Zealand moving lower indeed. So let's see. Pound yen could be good for downside. New Zealand yen for upside. Euro New Zealand for downside. Or just simply the euro dollar and pound dollar, to keep it simple. Those might be the most interesting. I'm going to keep an eye on all these opportunities on different time frames and choose a pick, but I'm just sharing my thoughts, how I see it with regard to the potential trades there for these currency pairs. Okay. All right. Let's see if we can get on the hourly chart, maybe on the New Zealand yen, something like this going, and then a pullback into the 20 EMA, something about like that here. That could make it interesting for a bounce up. This does look like a correction, but I'm not sure if this correction is finished because this could be one leg of the correction, and this could be a second leg. And I'm not sure if this leg is finished yet. Doesn't look so. So maybe a bounce here, or yeah, if it were to break later, plus a slight pullback continuation, those will look more interesting. All right. Looking at the stock, what a move up in the 1.5 years, almost doubling. It's quite impressive. almost quadrupling in 5 years. Not bad at all. All right. Anyhow, I'm just getting distracted a little bit. Thank you for watching these charts with me. All right. We're going to be back in March with a new webinar. Of course, feel free to join our webinars then as well. I would hope to see you live in our next one. Let me share you this. There we go. Once again, my FX book. Join our flagship if you want, or our EAs, of course. You can buy the EAs or trade with them through our managed accounts. Once again, we are traders first, with most of our earnings absolutely from trading, and just a small bit from this website and from sharing our EAs. So if you have any questions, please join the live webinar or write us at info@elitecurrency.com. Wish you everyone great trading and